Welcome to the Canadian Investors Course, Session 13, Portfolio Construction Commentary. Please note the terms of use and disclaimer. Slide 2, which was read to you in full in the introduction. Nope, our financial report doesn't look any better in 3D. No surprise here. Anyway, what this commentary is about is process. So, the first part of the process is looking at each point a step, each step a point at a time. So look at the yield curve, the economy, and inflation. Decide on your central tactical allocation. From there, look at your personalized strategic allocation. So the central tactical allocation is where in the world and which segments of the market should we be invested in. The personalized strategic allocation is obviously how much risk you should take, which means how much cash, how much bonds, what part of the yield curve, how many stocks, and are we going to use fundamental or technical analysis or both. Portfolio construction brings together all the CIC sessions. So please review the CIC sessions that explain how financial instruments work. We advise you to go with a full-service trusted wealth professional in your area who's licensed at the highest level and also practices the rule-based investment approach. It's common sense. You want somebody with experience and you want somebody who can provide you all the tools that you think you might need or that they think that you might need. Use a fee-based account to run this approach. It's the most economical. Fees outside the RSP or TFSA will be tax deductible, and generally it'll be less to go this route than to use mutual funds, fund MERs. Corporate business owners should investigate using individual pension plans instead of RSPs because you can make greater contributions to them. If you use all these tools together, you'll get the maximum benefit. We advise you to work with a trusted wealth professional in your area who understands the elements of this course and is practiced in the rules-based investment approach. This typical pie chart is very simple to manage and great for the do-it-yourselfer. Robo-advisors operate using this tool as well. Many people who deal with securities salespeople who place mutual funds into portfolios use this tool too. And you can substitute mutual funds with ETF and save fees with most likely very similar results. Question is, do you want to use that pie chart as the traditional pie chart as the means of deciding? You're always going to end up with a pie chart. It's a question of which components of the pie chart are you going to put into your particular strategy. The next bear market could be an expensive lesson for investors who believe in the buy and hold approach and have been applying the traditional pie chart tactics to their investing. With interest rates as low as they are now, it's unlikely that they'll see even lower interest rates. And it's possible that those interest rates could go the other direction. So be cautious if you have a lot of bonds in your portfolio in any form. Also, it's a good idea to practice a full and complete asset allocation program. The mutual fund and wrap account industry have turned the idea of stepping aside and raising cash in a portfolio into a bad idea. That's what they say anyway. After all, they say, your money has to be working for you. No, maybe they have to be working for you. Practicing strategic plus tactical allocation requires work. What are you paying your high fees for? At least investigate how this works. It's not new. Go to the postal code locator on this site and find a trusted wealth professional who knows how to practice rules-based investing. Become informed. You don't need yourself and your present advisor to learn or relearn the lessons of another painful bear market. That's the end of the commentary for session 13. Thank you for listening.